Chapter 14, Subtopic 6. The impact on the audit report of opening balances and comparatives, ISAs 510 and 710. Section Overview. ISA 510. Initial engagement, opening balances. ISA 710. Comparative information, corresponding figures and comparative financial statements. The audit work needed on opening balances and comparatives was described in an earlier chapter. The auditor must consider the possible impact of this work on the audit report. Section 6.1, ISA 510. Initial audit engagement, opening balances. The audit report is required by ISA 510 to be modified where the auditor is unable to obtain sufficient appropriate audit evidence where the auditor is unable to obtain sufficient appropriate audit evidence of the opening balances, qualified except for or a disclaimer of opinion. 2. Concludes that there is a misstatement in the opening balances that materially affects the current period's financial statement, and the misstatement is not properly accounted for or disclosed. 3. Concludes that accounting policies have not been consistently applied, or a change of accounting policy has not been properly accounted for or disclosed, or where the prior period's audit report was modified and the matter is still relevant and material to the current period's financial statement. Modify as appropriate. Section 6.2, ISA 710. Comparative information, corresponding figures and comparative financial statements. Financial statements include audited figures for the current financial year just ended and for the previous financial year, which are presented as comparative information. The audit opinion should not normally refer to the corresponding figures unless the following circumstances apply. Circumstance and ISA 710 requirements. The auditor gave a qualified opinion for the previous financial period and the problem remains unresolved. The requirement is to modify this year's audit report. Circumstance. The auditor finds a material misstatement in the prior period financial statement on which an unmodified opinion was previously given and the corresponding figure have not been appropriately restated. The requirement is to give a qualified or adverse opinion on the current period financial statement in respect of the corresponding figures included. Circumstance 3. The prior period financial statements were audited by another auditor. The requirement is to use an other matter paragraph to explain this fact and the type of opinion given. The fourth circumstance. The prior period financial statements were not audited. The requirement is to use an other matter paragraph to state this fact. However, the auditor remains responsible per ISA 510 for obtaining sufficient appropriate evidence on opening balances. Subtopic 7. The impact of going concern on the audit report, ISA 570. Section Overview. Introduction. Where the use of the going concern assumption is appropriate but a material uncertainty exists. Management's attitude to disclosure of material uncertainty. Where the use of the going concern assumption is appropriate. Section 7.1, Introduction. If indications are found which suggest that the going concern basis might not be appropriate for preparing the financial statement, the auditor is required by ISA 570 to consider the implication for his audit report. The form of the report will depend on the auditor's judgment. There are two possible views it could take. 1. The use of the going concern assumption is appropriate but a material uncertainty exists. Or 2. The use of the going concern assumption is inappropriate. If management is unwilling to make or extend a going concern assessment, the auditor is also required to consider the implication of this for his audit report. Section 7.2. Where the use of the going concern assumption is appropriate but a material uncertainty exists. Where the auditor considers that the going concern assumption is appropriate but a material uncertainty exists, he must consider whether the financial statements adequately describe the principal events or conditions that may cast significant doubt on the entity's ability to continue as a going concern, and management's plan to deal with those events or conditions, and disclose clearly that there is a material uncertainty related to events or conditions that may cast significant doubt on the entity's ability to continue as a going concern. If there is adequate disclosure, then the auditor should express an unmodified opinion. However, it should use an emphasis of matter paragraph to 1. Highlight the uncertainty, and 2. Draw attention to the relevant note in the financial statement. An example of such an emphasis of matter paragraph was given above. If there is not adequate disclosure, the auditor should express a qualified or adverse opinion. Section 7.3. Management's attitude to disclosure of material uncertainty. The management of a client company will probably be reluctant to include a disclosure about material uncertainty in relation to the going concern assumption. There are several reasons for this. 1. Admitting that there is material uncertainty about whether the company can continue as a going concern for the next 12 months can be seen as a sign of management failure. Management will probably be reluctant to admit their responsibility for failure to the company's shareholders. 2. A statement that there is material uncertainty about the ability of the company to continue in business will make the situation even worse for the company. Banks will be reluctant to lend more money and may withdraw existing lending facilities. Suppliers may be reluctant to supply more goods without a credit guarantee. Customers may stop buying the company's product due to concern that the company will not be in existence to provide after-sales service. 3. Employees will become more concerned for job security, and many might look for jobs with other employers. Staff turnover will therefore increase. It is also possible that management do not accept that there is material uncertainty about the ability of the company to continue in business. There could therefore be genuine disagreement between management and the auditor on this issue. As indicated above, if management refuses to provide suitable disclosure, the audit opinion should be modified. Section 7.4. Where the use of the going concern assumption is inappropriate. Where the financial statements have been prepared on the going concern basis, but the auditor considers the going concern assumption is inappropriate, the auditor should express an adverse opinion. The auditor may give an unmodified opinion if the financial statements have been prepared on an alternative acceptable basis, for example, a breakup basis, and there is adequate disclosure of this basis. An emphasis of matter paragraph may be required in the audit report to highlight the alternative acceptable basis. Subtopic 8. Communicating with those charged with governance, ISA 260. Section Overview. Introduction. Matters to be communicated. The communication process. Actions when an audit report is to be modified. Section 8.1. Introduction. In most countries, the auditor communicates to the shareholders as owners of the company by means of his audit reports. ISA 260, communication with those charged with governance, requires in addition that the external auditor should communicate formally to those charged with governance to provide useful feedback about the audit. In the case of a company, those charged with governance are the board of directors or the audit committee. In your exam, it will usually mean the directors of the company. The auditor's objective in respect of ISA 260 are to 1. Communicate his responsibilities and give an overview of the planned scope and timing of the audit. 2. Obtain information relevant to the audit. 3. Provide timely observations arising from the audit which are significant to management's responsibility to oversee the financial reporting process. 4. Promote effective communication between the auditor and those charged with governance. As a result of the communication, the auditor should be satisfied that there is sufficient documentation of all the significant matters in the audit and that these have been brought to the attention of the individuals in the client entity who are accountable to its owners. Section 8.2 Matters to be communicated. The auditor is required by ISA 260 to communicate the following matters. 1. His responsibilities in relation to the audit, including notification that he is responsible for forming and giving an opinion on the financial statement prepared by management, and the audit does not relieve management or those charged with governance of their responsibilities. 2. An overview of the planned scope and timing of the audit. 3. Any significant findings from the audit. These are often called the management letter points and are usually communicated along with any deficiencies in internal control as required by ISA 265. They include the auditor's view on the entity's accounting policies, estimates, and financial statement disclosures. Any significant difficulties encountered during the audit. Any significant matters arising from the audit already brought to the attention of management and written representations required. Any other matters arising from the audit that are significant to the oversight of the financial reporting process. For listed entities, a statement which must be made in writing that the audit team or firm have complied with relevant ethical requirements in respect of independence of all matters relevant to independence, such as relationship and non-audit fees, and the safeguards applied. This requirement does not apply if those charged with governance are involved in managing the entity, as they will already be aware of these issues. The significant matters do not include material weakness in internal control. As such, a report is a requirement of ISA 265, not ISA 260. Section 8.3 The communication process. The communication with those charged with governance may be provided either in writing or orally. It could take place as a discussion between the auditor and an appropriate level of management, perhaps with the audit committee in the case of a larger company. However, where oral communication will not be adequate, ISA 260 requires that communication is in writing, in the form of a letter or report. If communication is oral, then the matters communicated to whom and when must be documented. Communication must be made on a timely basis. The appropriate timing will vary depending on the matter to be communicated. Communication in respect of planning matters will be likely to be made early in the engagement. Any significant difficulties encountered during the audit should be communicated as soon as practicable, especially if likely to lead to a modified opinion. Section 8.4. Actions when an audit report is to be modified. ISAs 705 and 706 require the auditor to communicate any planned modification to the auditor's report with those charged with governance. This is to ensure that those charged with governance understand that a modification is to be made and the reason for it. Early communication also gives those charged with governance an opportunity to provide the auditor with further information and explanation prior to the issuance of the auditor's report. Other actions to consider when an audit report is to be modified include 1. External consultation, e.g. with legal counsel. 2. Reconsider management integrity and whether there is a need to revise the audit strategy and plan, particularly relevant if the modification is due to a management-imposed limitation of scope. 3. Withdrawal from the engagement if the matter is sufficiently serious and if withdrawal allowed by law. In such a case, it is always advisable to seek legal advice. Note that ISA 210 requires an auditor to decline an engagement if there has been a limitation on scope prior to commencement of the audit, which is expected to result in a disclaimer of opinion, unless required to undertake the engagement by law. Subtopic 9. Communicating deficiencies in internal control, ISA 265. Section Overview. Introduction and requirements of ISA 265. The Management Letter. Section 9.1. Introduction and requirements of ISA 265. ISA 315, covered largely in an earlier chapter, requires the auditor to communicate material weaknesses in internal control identified during the audit to management. This requirement is embodied in ISA 265, communicating deficiencies in internal control to those charged with governance and management. A deficiency is defined by ISA 265 as where 1. A control is designed, implemented, or operated in such a way that it is unable to prevent or detect and correct misstatement in the financial statement on a timely basis, or 2. A control necessary to prevent or detect and correct misstatement in the financial statement on a timely basis is missing. A significant deficiency is one which merits the attention of those charged with governance. ISA 265 requires the auditor to 1. Communicate significant deficiencies identified during the audit to those charged with governance in writing on a timely basis. 2. Communicate any other deficiencies to an appropriate level of management. The communication of significant deficiencies must be in writing and is required to cover 1. A description of the deficiencies and an explanation of their potential effects. 2. Sufficient information to allow those charged with governance and management to understand the context of the communication, including an explanation that the purpose of the audit was to express an opinion on the financial statement, whilst the audit did include consideration of internal control in order to design appropriate audit procedures. This was not done for the purpose of expressing an opinion on the effectiveness of internal control, and the matters being reported are limited to those deficiencies identified during the audit and considered of sufficient importance to be reported. The above should make it clear that the report covers only those weaknesses that have been discovered as a result of the audit work that has been undertaken. It is a byproduct of a statutory audit and is not the result of a full review of systems and control. As a consequence, other weaknesses may exist that are not mentioned in the report. The auditor will also usually state that such communication has been provided for the purpose of those charged with governance and that it may not be suitable for other purposes. Section 9.2. The management letter. Although it is now a requirement of both ISA 315 and ISA 265, the management letter or letter of witness has long been seen as an extra service provided to the client by the external auditor. If management address the point in the letter, the controls in place will be improved. This may enable future audits to focus on the more efficient system-based approach. This in turn may reduce the cost of the audit to the client. The report is prepared and sent after the results of the test of controls are known, usually after the interim audit. The report may later be updated after the final audit. If further weaknesses have been found, or if weaknesses that were reported previously have not yet been dealt with. In line with ISA 265 requirements, to give a description of the deficiencies and an explanation of their potential effects, the report will usually identify the following information for each weaknesses reported. 1. The nature of the weakness in the present system in terms of both design and operation. In other words, is there a control weakness on paper? If there is no control weakness on paper, are the controls applied effectively in practice? 2. The implication of this weakness in controls. 3. Recommendations for improvement. The auditor should ask management to provide a response and action plan for each weakness identified in the report. It should also mention that the content of the report will be followed up in future audits. Subtopic 10. Specialized areas. Section Overview. Section 1. ISA 800. Audit of financial statements prepared in accordance with Special Purpose Framework. Section 2. ISA 805. Special Considerations. Audit of single financial statements and special elements, accounts or items of a financial statement. Section 3. ISA 810. Engagement to report on summary financial statements. Section 10.1. ISA 800. Audit of financial statements prepared in accordance with Special Purpose Frameworks. ISAs in the 100 to 700 series apply to an audit of financial statements. ISA 800 deals with special considerations in the application of those ISAs to an audit of financial statements prepared in accordance with a Special Purpose Framework. Although such special consideration cover 1. Acceptance of the engagement, 2. Planning and performance of the engagement, and 3. Forming an opinion and reporting on the engagement. The bulk of the ISAs is concerned with reporting. An audit report on such financial statements will add credibility to those financial statements. Considerations when accepting the engagement. The auditor is required to determine the acceptability of the financial reporting framework applied by obtaining an understanding of 1. The purpose for which the financial statements have been prepared, 2. The intended users of those financial statements, 3. The steps taken by management to determine that the framework is acceptable in the circumstances. The Special Purpose Framework could be a fair presentation framework or a compliance framework, as discussed under ISA 700 above. Considerations when planning and performing the audit. ISA 200 requires the auditor to comply with all ISAs relevant to the audit. ISA 800 requires the auditor to determine whether any special consideration is needed. ISA 315 requires the auditor to obtain an understanding of the entity selection and application of accounting policies. If the special purpose financial statements have been prepared in accordance with the provision of a contract, then ISA 800 requires him to obtain an understanding of any significant interpretation of the contract that management has made in the preparation of those financial statements. Forming an opinion and reporting considerations. When forming an opinion and reporting on special purpose financial statements, the auditor is required to follow ISA 700 and other relevant ISAs. The table below shows how the requirements of ISA 700 and ISA 706 are applied by ISA 800. ISA 700/706 requirements, how applied by ISA 800. The auditor must evaluate whether the financial statements adequately refer to or describe the applicable financial reporting framework, ISA 700, how applied by ISA 800. For financial statements prepared in accordance with the provision of a contract, the auditor must evaluate whether the financial statements adequately describe any significant interpretations of the contract on which the financial statements are based. Provisions covering the form and content of audit reports, ISA 700, how applied by ISA 800. The report must also describe the purpose for which the financial statements are prepared, and if necessary, the intended user, or refer to a note which gives that information. If management has a choice of financial reporting framework in this instance, the section on management responsibility must refer to its responsibility for making an acceptable choice. Use of an emphasis of matter paragraph, ISA 706. The report must include an emphasis of matter paragraph alerting users of the fact that the financial statements have been prepared in accordance with a special purpose framework, and that as a result they might not be suitable for another purpose. Example: audit report on special purpose financial statements. An example of an audit report on special purpose financial statements prepared in accordance with the financial reporting provisions established by a regulator is set out below. The additional wording per ISA 800 is shown in italics in square brackets. Independent Auditors Report. Appropriate address, that's on the left hand side. Subheading: Report on the financial statement. We have audited the accompanying financial statement of ABC Company, which comprise the statement of financial position as at December 31st, 2024, and the statement of comprehensive income, statement of changes in equity, and statement of cash flow for the year then ended, and a summary of significant accounting policies and other explanatory information. The financial statements have been prepared by management based on the financial reporting provision of Section Y of Regulation Z. Management responsibility for the financial statements. Management is responsible for the preparation and fair presentation of these financial statements in accordance with the financial reporting provision of Section Y of Regulation Z, and for such internal control as management determines is necessary to enable the preparation of financial statements that are free from material misstatements, whether due to fraud or error. Auditor's responsibility. Our responsibility is to express an opinion on this financial statement based on our audit. We conducted our audit in accordance with international standards on auditing. Those standards require that we comply with ethical requirements and plan and perform the audit to obtain reasonable assurance about whether the financial statements are free from material misstatements. An audit involves performing procedures to obtain audit evidence about the amounts and disclosures in the financial statement. The procedures selected depend on the auditor's judgment, including the assessment of the risk of material misstatement of the financial statement, whether due to fraud or error. In making those risk assessments, the auditor considers internal control relevant to the entity's preparation and fair presentation of the financial statement in order to design audit procedures that are appropriate in the circumstances, but not for the purpose of expressing an opinion on the effectiveness of the entity's internal control. An audit also includes evaluating the appropriateness of the accounting policies used and the reasonableness of the accounting estimates made by management, as well as evaluating the overall presentation of the financial statement. We believe that the audit evidence that we have obtained is sufficient and appropriate to provide a basis for our audit opinion. In our opinion, the financial statements give a true and fair view or present fairly in all material respects of the financial position of ABC Company as of December 31st, 20x4, and of its financial position and of its financial performance and its cash flow for the year then ended in accordance with the financial reporting provision of Section Y of Regulation Z. Basis of accounting. Without modifying our opinion, we draw attention to Note X to the financial statement, which describes the basis of accounting. The financial statements are prepared to assist ABC Company to meet the requirements of Regulator DEF. As a result, the financial statement may not be suitable for another purpose. Other matter. ABC Company has prepared a separate set of financial statements for the year ended December 31st, 20x4, in accordance with International Financial Reporting Standards, on which we issued a separate auditor's report to the shareholders of ABC Company dated March 31st, 20x5. Auditor's signature, date of the report, auditor's address. Section 10.2 ISAs 805 Special Considerations, Audit of Single Financial Statement and Specific Elements, Accounts or Items of a Financial Statement. ISA 805. The International Standards on Auditing in the 100 to 700 series apply to an audit of financial statements and are to be adapted as necessary in the circumstances when applied to audit of other historical financial information. ISA 805. This with special consideration in the application of those ISAs to an audit of a single financial statement or of a special element, account or item of a financial statement. The single financial statement or the specific element, account, or item of a financial statement may be prepared in accordance with a general or special purpose framework. If prepared in accordance with a special purpose framework, ISA 800 also applies to the audit. ISA 200 requires the auditor to comply with all ISAs relevant to the audit. ISA 805 requires the auditor of a single financial statement and specific elements, accounts, or items of a financial statement to apply ISA 200 irrespective of whether they are engaged as the auditor of the entity's complete set of financial statements. ISA 210 continues to apply and requires the auditor to consider whether application of the chosen financial reporting framework will result in a presentation that provides adequate disclosures to enable the intended users to understand the information conveyed in the financial statement or element. Forming an opinion and reporting considerations. When forming an opinion and reporting on a single financial statement or a specific element, the auditor is still required to follow ISA 700. and other relevant reporting ISAs, adapted as necessary in the circumstances of the engagement. Note that if the auditor of the single financial statement or specific element is also engaged to report on the full set of financial statements, they must provide separate reports for the two engagements. The auditor shall not express an unmodified opinion on an element if that element constitutes a major portion of the entity's complete set of financial statements, and their opinion on the complete set of financial statements as a whole is adverse, or they have disclaimed an opinion. Example: the auditor's report on a single financial statement prepared in accordance with a fair presentation framework. Independent auditor's reports. Appropriate addressee. We have audited the accompanying balance sheet of ABC Company as at December 31, 2024, and a summary of significant accounting policies and other explanatory information. Management responsibility for the financial statement. Management is responsible for the preparation and fair presentation of this financial statement in accordance with those requirements of the financial reporting framework in jurisdiction X relevant to preparing such a financial statement, and for such internal control as management determines is necessary to enable the preparation of the financial statement that is free from material misstatement, whether due to fraud or error. Auditor's responsibility. Our responsibility is to express an opinion on the financial statement based on our audit. We conducted our audit in accordance with international standards on auditing. Those standards require that we comply with ethical requirements and plan and perform the audit to obtain reasonable assurance about whether the financial statement is free from material misstatement. An audit involves performing procedures to obtain audit evidence about the amount and disclosures in the financial statement. The procedures selected depend on the auditor's judgment, including the assessment of the risk of material misstatement of the financial statement, whether due to error or fraud. In making those risk assessments, the auditor considers internal control relevant to the entity's preparation and fair presentation of the financial statement in order to design audit procedures that are appropriate in the circumstances, but not for the purpose of expressing an opinion on the effectiveness of the entity's internal control. An audit also includes evaluating the appropriateness of accounting policies used and the reasonableness of accounting estimates, if any, made by management, as well as evaluating the overall presentation of the financial statement. We believe that the audit evidence we have obtained is sufficient and appropriate to provide a basis for our audit opinion. In our opinion, the financial statement presents fairly, in all material respects, the financial position of ABC Company as at December 31, 2024, in accordance with those requirements of the financial reporting framework in jurisdiction X, relevant to preparing such financial statements. Auditor's signature, date, auditor's address. Section 10.3 ISA 810 Engagement to report on summary financial statements. Many local jurisdictions allow entities to provide certain users, perhaps employees, with financial statements in a summarized form. This summarized statement presents the aspect of the entity's financial performance and financial position, which are considered to be the main parts that are useful and necessary for the majority of users. The entity may ask its auditors to issue a report on this summary statement to add credibility to the information contained in the document. ISA 810 Engagement to report on summary financial statement provides guidance on this area. The objectives of the auditor per ISA 810 are to 1. Determine whether it is appropriate to accept the engagement to report on summary financial statements. 2. And if engaged to, form an opinion on the summary financial statements based on evidence obtained and express that opinion clearly in a written report that also describes the basis for that opinion. Requirements of ISA 810. The auditor should not report on the summary financial statement, that is SFS. The auditor should not report on the SFS unless he has already issued an opinion in the full financial statement from which the SFS are derived. Before accepting an engagement to report on summary financial statement SFS, the auditor should 1. Decide whether the criteria applied by management in the preparation of the SFS are acceptable. 2. Obtain management agreement that it is responsible for preparing the SFS in accordance with the above criteria, making the full financial statement available to the users of the SFS, including the auditor's report on the SFS in any document which contains the SFS. The applied criteria may be established by law or regulation. The auditor should perform the following procedures as a basis for his opinion on the SFS. 1. Evaluate whether the SFS adequately disclose their summarized nature and identify the full financial statement. The criteria applied in the preparation of the SFS. 2. When the SFS are not accompanied by the full financial statement, consider whether the SFS describe clearly where the full financial statements are available or the law or regulation which states that they need not be. 3. Compare the SFS to the full financial statement to ensure they agree with or can be delivered from the latter or can be derived from the latter. 4. Evaluate whether the SFS have been prepared in accordance with the applied criteria. The SFS contains sufficient information so as not to be misleading. The full financial statements are readily available unless not required to be. Where the auditor is able to give an unmodified opinion on the SFS, one of the following phrases should be used. 1. The SFS are consistent in all material respects with the audited financial statement in accordance with applied criteria, or the SFS are a fair summary of the audited financial statement in accordance with applied criteria. The term true and fair or its equivalent is not used in the report because the SFS will not contain all the information required by a recognized financial reporting framework. Reporting. The auditor's report on the SFS should include the following elements: title, addressee, an introduction paragraph that identifies the SFS on which the auditor is reporting, identifies the full financial statement, refers to the auditor's report on the above, its date, and the type of opinion given in that report, e.g. unmodified. If the report on the SFS is dated later than the audit report on the full financial statement, note that it cannot be dated earlier. State that neither set of financial statements reflect the effect of events that occurred after the date of the audit report on the full financial statement. State that the SFS do not contain all the disclosures required by the financial reporting framework applied in the preparation of the full financial statement, and that reading the SFS is no substitute for reading the full financial statement. A description of management responsibility for the SFS. A statement that the auditor is responsible for expressing an opinion on the SFS based on the procedures required by this ISA. An opinion, date of the report, auditor's address, auditor's signature. Note that the auditor might have issued a qualified opinion on the full financial statement, or used an emphasis of matter or other matter paragraph, but may nevertheless be satisfied that the SFS are properly derived from those full financial statements. In this section, the auditor's report should also describe the basis for the opinion, any effect of the opinion on the SFS. If the opinion was an adverse or disclaimer of opinion, the auditor's report on the summary financial statements should state that it is inappropriate to express an opinion on the SFS. Example. An example of a report on summary financial statements is set out below. This example is based on circumstances where an unmodified opinion was expressed on the full financial statement, and the auditor's report on the SFS is dated later than the full auditor's report. Report of the independent auditor on the summary financial statement. Appropriate addressee. The accompanying summary financial statement, which comprise the summary statement of financial position as at 31st December 2023, the summary statement of comprehensive income, summary statement of changes in equity, and summary statement of cash flow for the year then ended, and related notes, are derived from the audited financial statement of ABC Company for the year ended 31st December 2023. We expressed an unmodified audit opinion on those financial statements in our report dated 15th February 2024. Those financial statements and the summary financial statements do not reflect the effect of events that occurred subsequent to the date of our report on those financial statements. The summary financial statements do not contain all the disclosures required by describe financial reporting framework applied in the preparation of the audited financial statement. Reading the summary financial statement, therefore, is not a substitute for reading the audited financial statement of ABC Company. Management's responsibility for the summary financial statement. Management is responsible for the preparation of a summary of the audited financial statement in accordance with described established criteria. Auditor's responsibility. Our responsibility is to express an opinion on the summary financial statement based on our procedures, which were conducted in accordance with international standards on auditing. ISA 810, engagement to report on summary financial statements. Opinion. In our opinion, the summary financial statement derived from the audited financial statement of ABC Company for the year ended 31st December 2023 are consistent in all material respects with those financial statements. Auditor's signature, date, auditor's address. Subtopic 11. Chapter review. Chapter review. Before moving on to the next chapter, check that you now know how to 1. Audit opening balances and comparatives. 2. Explain the impact of going concern on the audit report as required by ISA 570. 3. Describe in detail the content of an audit report. 4. Identify when the basic audit report should be modified, and if so, how. 5. Explain the auditor's duties with respect to other information in documents. In documents containing audited financial statements as per ISA 720. 6. Discuss which matters should be communicated with those charged with governance and describe the communication process. 7. Briefly explain the form, content, and use of specialized accounts and use of specialized audit reports. Quick quiz questions. On checking the order, question 1. On checking the other information that an audit client intends to publish with the financial statement and audit report, the auditor discovers some significant inconsistencies in the order information. He asked the client management to correct the information, but they refused. Which of the following measures may the auditor now take? 1. Include an order matter paragraph in the audit report. 2. Issue a qualified audit report. 3. Withhold the issue of the audit report. 4. If allowed by law, withdraw from the audit. Objectives: A. 1, 2, and 3 only. B. 1, 2, and 4 only. C. 1, 3, and 4 only. D. 2, 3, and 4 only. The answer is C. And C states that 1, 3, and 4 only. That means include an order matters paragraph in the audit report. Withhold the issue of the audit report. If allowed by law, withdraw from the audit. The explanation goes thus. There is no reason to qualify the audit report if the auditor considers the financial statements to give a true and fair view. However, it is a matter of concern that the audit client will issue other information with the financial statement and audit report, which contain significant inconsistencies or misstatements of fact. Users of the financial statement may assume incorrectly that the other information has been audited. Question 2. Which of the following will not be provided in an audit report? A. Except for opinion due to material limitation in scope. B. Unqualified opinion. C. Adverse opinion due to pervasive limitation in scope. D. Except for opinion due to material disagreement. Answer is C. A pervasive limitation in scope should lead to a disclaimer of opinion. Question 3. Which part of the audit report should include a statement that the audit report has been carried out in accordance with ISAs? A. Scope. B. Management responsibility. C. Auditor's responsibility. D. Introductory paragraph. The answer is A. That's the scope. Question 4. Which of the following affects the audit opinion? 1. Material limitation on scope. 2. Material disagreement. 3. Emphasis of matter. The options are A. 1 and 2 only. B. 1 only. C. 2 only. D. 1, 2, and 3. The answer is A. An emphasis of matter paragraph does not affect the audit opinion. Question 5. When the auditor disagrees with a specific item in the financial statement, but considers that the financial statement as a whole give a true and fair view, even though the matter is material, the audit report should A. Give a disclaimer of opinion. B. Give an except for opinion. C. State a disagreement. D. Include an emphasis of matter. The answer is B. Where there is a material limitation on scope or a material disagreement, the audit report should give an except for opinion. That's the end of chapter 14. Thank you.